Okay, wonderful.
Yes.
Well, today, wonderful. Well, today we're going to talk about the disability tax credit and Canada Disability Benefit. We're also going to touch base on other benefits that are related to the disability tax credit. At DABC, where I'm calling from is the traditional and stolen territories of the Musqueam and Squamish and Tsleil-Waututh peoples at Vancouver, BC. And we recognize that the work of Disability Alliance Canada takes place on the traditional and stolen territories of Indigenous people across what is now called Canada. We acknowledge and respect diverse histories, languages, cultures of Indigenous peoples that have lived on and have taken care of this land since time immemorial. As Tekla mentioned, my name is Cynthia Min, and I'm Program Director of Disability Alliance Canada. A little bit about us, we're a very new organization. We are a national nonprofit that supports people with disabilities across Canada in accessing benefits to which they're entitled. We're affiliated with a provincial organization called Disability Alliance BC, which has been an organization since 1977 that champions disability issues through advocacy, direct services, education and resources, as well as research and publications. And because we recognize that our direct service supports are not consistently offered across Canada, we decided to open a new national organization to make sure that people with disabilities across Canada are being supported. We're first starting to help people through federal disability programs. So that includes the Disability Tax Credit, Canada Disability Benefit, Registered Disability Savings Plan, and Canada Pension Plan Disability. We also deliver workshops on topics related to the federal disability programs. I'm so glad that you're joining us here today. So today we'll get into 3 specific benefits and we'll talk a little bit more about all the benefits that are attached to it. But our main one is the disability tax credit. We'll talk about why the DTC is important, who is eligible for the DTC, and how someone can start applying for the DTC. We'll get into some of the major benefits connected to the DTC. The first one being Canada Disability Benefit. It's that new benefit offering $200 to people with disabilities who are on low income. We'll talk about why the CDB is important, who is eligible for the CDB, how someone can start applying for the CDB, and we might have a discussion if we have time on what's happening with the CDB in Alberta, but only if that's of interest to folks here. Finally, we'll get into the Registered Disability Savings Plan. What is the RDSP? Who's eligible for the RDSP? And why the RDSP is important. You'll have plenty of time for questions after. So let's get into the disability tax credit. What is it? The DTC is a non-refundable tax credit that can help reduce the amount of income tax owed by a person with a disability. So what that means is that when people file their taxes, they can claim a portion of the disability tax credit on their taxes. And so they'll claim the disability amount and they'll get a portion of that back when they do file their taxes. How that looks is if someone does pay income tax, and then they're able to claim the disability amount, which is around that this year, I think it's around $10,000. They get a portion of that back, which is around 14% of that. And then they would get, if they're paying income tax, they would get the income tax back as a refund. But let's say they don't owe any income tax. There are 2 things to keep in mind. The first is that the disability tax credit is transferable to someone who supports them, which means that if they have someone in their life that helps financially support them with food, shelter, and clothing costs. They can actually transfer the credit amount onto their family members so that their family members can actually reduce the taxes that they owe as well. The second thing to keep in mind is that the credit can be applied retroactively. So if someone has been living with their disability for a long time and has been paying income tax within that time, they can actually receive taxes that they are owed up to 10 years before they apply. So it's a really good idea to think about the tax credit as a way to get some taxes that someone owes back. But why is the disability tax credit is important? Well, it's not only that people can get their refunds back, but it's a common misconception that people without taxable income should not apply for the DTC. But the reality is that even for individuals without taxable income, the DTC is often worth applying for because it opens a door to a lot of other benefits and financial programs. Here are some of the other benefits that I'm talking about. For workers who might already be receiving the Canada Workers Benefit, that is, if you're making a low to modest income, if you have the DTC, you would get a disability supplement on top of that. For caregivers, if someone has the Canada Caregiver Credit and they have a child with a disability tax credit, they would receive an additional monthly payment on top of that called the Child Disability Benefit. The DTC also makes it easier for people to apply for the Canada Caregiver Credit. For homeowners, everybody who is a first-time homeowner might know that you will get a home buyer's amount for the first home that you purchase, which is a non-refundable tax credit. But if someone has a DTC, or if the person who's living in that residence has a DTC, you can get that home buyer's amount for every home that you purchase. Homeowners can also access a home accessibility tax credit, which allows people to claim expenses on their taxes for any renovations that they're making to make their home more accessible. That is to improve mobility and to, make things a little bit easier to reach, make things a little bit more accessible in the shower, for example. For those with disability trusts, you can actually if you have the DTC, you can allow a trust to be a qualified disability trust status, or you can have a preferred beneficiary election. This makes it so that there's less taxes that you have to pay when the trust is withdrawn. And for medical expenses, there are certain medical expenses that rely on the disability tax credit to be able to be claimed on your taxes. For students, there are certain education-related benefits that are for full-time students, but if you have the DTC, you can be a part-time student that still would be eligible for these full-time student grants. And then finally, for financial support, you'll have those two benefits that we're going to be talking about today. The Registered Disability Savings Plan, which is a long-term savings plan designed to help someone save for their financial futures. And then the Canada Disability Benefit, which helps people get that added monthly benefit on top of what they already have. So who's eligible? Well, someone might qualify for the DTC if they have residential ties in Canada for tax filing purposes. And that is really important for everybody who you're supporting here. It doesn't mean that someone has to be a Canadian citizen, and it doesn't mean that they have to be a permanent resident. It just means that they have to have residential ties in Canada and pay taxes in Canada. They do have to have a valid social insurance number, and they do have to have a severe and prolonged physical or mental impairment. What makes a physical or mental impairment prolonged? Well, in this application, what it means is that the person's impairment has lasted or is expected to last for a continuous period for at least 12 months. That does not mean that they have to have already had their disability for 12 months. It means that they either have had their disability for 12 months or they will be expected to have their disability for 12 months. And what does physical and mental impairment, a severe physical and mental impairment mean? Well, someone can qualify if they have either of these two things. First, if they are markedly restricted in activity of daily life, that means they can't do the activity, they need a lot of help to do the activity, or they take a lot longer to do the activity than most people their age without restrictions. The person can also qualify in the second way. If someone experiences a cumulative effect of significant restrictions, this time they're restricted a little less, but in two or more of the activities, and the cumulative effect is equal to a marked restriction. So, what am I talking about when I'm talking about those impairment categories? I'm talking about vision, hearing, speaking, walking, eliminating, which is using the toilet, feeding, which includes eating or preparing meals, dressing, and mental functioning necessary for everyday life. So, again, someone can qualify if they are markedly restricted in one of these categories, or if they're restricted a little less, but in two or more of these categories. Let's dive into some examples of this. So let's say Joe. Joe was diagnosed with ulcerative colitis in 2019 and wants to apply for the DTC. They only have limitations in the eliminating impairment category, but their limitations are severe. They spend over 2 hours going to the washroom daily. They experience a lot of pain. They have to go to the bathroom a lot more often, and they experience a lot of that urgency feeling. And they also have incontinence, which means they have accidents all the time. They have to bring a change of clothes with them when attending social gatherings. This means that they take an inordinate amount of time to perform that category of using the toilet, and they may qualify as markedly restricted in that activity of daily life. Let's think about another example. So Caro. Caro was diagnosed with ADHD in 2019 and arthritis in 2020 and wants to apply for the DTC. Caro has limitations in walking and mental functioning. So when compared to someone their age without restrictions, Caro takes a lot longer to walk a few blocks. And she needs constant reminders to perform the basic mental functions of daily life. So needs help, remembering to, take care of herself and perform basic hygiene tasks. So those two things together are present substantially all the time, despite therapies, medical devices, or any medications that she has. When taken together, these limitations mean that Caro takes an inordinate amount of time to perform the different activities of daily life, and the cumulative effect of these limitations are equal to a market restriction overall, which means she stands a good chance of being approved for the DTC. But there's that third way that someone can qualify. And that is a person can qualify if they require therapy to support a vital function that is necessary for everyday life. This is called the life-sustaining therapy category. So the nice thing about the DTC is that unlike other benefit applications, the DTC is not based on any of the category, the following. The DTC is not based on age, which means you can apply from birth to old age, and it doesn't matter how old you are. It also doesn't matter whether or not you can work or attend school. So someone can work and have a high income, or someone might not be working and have no income and still apply for the DTC. The application does not depend on income. So someone can make no income or have a really high income and still apply for the DTC. Doesn't depend on any assets. And it also does not depend on a formal medical diagnosis. Actually, diagnosis is less important in this application than in other applications. So what you're really talking about here is someone, let's say, who is not yet diagnosed can still apply for the DTC. And it also means that a diagnosis is not enough to get the disability tax credit. You're going to need to know how to apply. You're going to need to provide specific examples to the application in order to get approved. So how can someone apply? Well, DTC applicants must submit a completed DTC certificate that is Form T2201 to the CRA. This certificate is made up of two parts. The first part is Part A, and that's the individual section. This section is all about providing basic personal information and information about a supporting caregiver if that DTC is being transferred. The next part is Part B, and that is that medical practitioner section. So you do need to get the DTC medically certified by a medical practitioner. I'm going to get into who can be considered a medical practitioner. So let's take a look at Part A. This section takes up the first 2 pages of the form and must be completed and signed by the applicant or their legal representative. But that first part is all about basic personal information. And then there's a second question that asks if there is someone supporting that takes care of food, shelter, and clothing costs. If there's someone in that person's life and it is a family member, family members can include parents, children, parents, grandchildren, uncles and aunts, nieces and nephews. These people can all help and get their disability tax credit transferred over to them to help with their taxes. It's important when you're filling out that second page to talk about financial support for disability, not emotional support or physical support. I also want to talk about that there's a third question on the form that asks if someone wants their taxes reassessed automatically. If it's the applicant or their legal representative or guardian, we would recommend that someone clicks yes, that someone says yes, they want their taxes readjusted automatically. But if it's someone who's an adult and they want to transfer their credit onto a caregiver, then their caregiver will not be able to have their taxes readjusted. Once the DTC is approved, we recommend that the person writes a letter to the CRA or has their taxes readjusted in order to transfer the DTC onto their caregivers. Part B section takes up most of the form and includes a medical report that must be completed and signed by their doctor, nurse practitioner, or other qualified health professional. Other health professionals can only fill out the form if the disability is within their area of practice. So medical doctors and nurse practitioners can complete and sign a form that focuses on any of the impairment categories. And other medical practitioners can complete a sign-in form if their disability is within their area of practice. So as you can see here, optometrists can help with if someone's restriction is in vision. Audiologists can help with hearing. Physiotherapists can help with walking. Occupational therapists can help with walking, feeding, dressing, or the cumulative effect of all these categories. Psychologists can help with mental functioning, and speech language pathologists can help with speaking. And as you can see, medical doctors and nurse practitioners can help with all 8 of those categories. What we usually see is that people may have some barriers accessing health practitioners. And so if someone has restrictions in physical and mental functioning categories, we try to recommend that someone go to a nurse practitioner and medical doctor. Maybe the medical doctor or nurse practitioner doesn't have all the information that they need to certify all categories. And so they may want some more medical information from other practitioners. Sometimes it's a good idea to tell the people that you're supporting that they can actually ask their other professionals to write letters to provide more information And that way they'll feel more secure. The nurse practitioner and medical doctor will feel more secure certifying the application. But let's say that's not possible. And medical doctors and nurse practitioners don't have access to the medical information, and there's no way to get other medical practitioners to provide that additional information that a medical practitioner might need. The CRA actually accepts um, different applications for different categories. So you can submit an application for walking and an application for mental functioning from a psychologist and then from a physiotherapist, and they would still consider that. The difficulty is that if there's any contradictory information, if there's any information missing, it could increase the likelihood of someone getting denied. So we don't really recommend this approach, but it is possible for someone to do that. It's their last resort. Some key terms when you're applying is that you want to think about whether or not an impairment happens substantially all the time. Now, this does not mean that it excludes episodic symptoms or symptoms that come again and again. They're recurring, but when they happen, they're persistent and they are severe. So if that is the case for your client, that still would qualify as substantial all the time because their condition is unpredictable and symptoms can happen at any time. And when they happen, it really does restrict the client. You also want to think about, does it take comparing yourself or comparing the applicant to someone their age without the same restrictions? Does it take 2 times as long or does it take 3 times as long? If it takes 2 times as long, then maybe they're restricted a little less. So they might be approved under the cumulative effects category. If it takes 3 times as long, then they would be restricted under a market restriction. Think about when people are unable to manage activity and make that very clear. Think about when people require assistance to complete an activity. And for children, it can be really difficult to decide whether an impairment exists because they're a child or whether it exists because they are restricted and because of their disability. Well, you want to still do the same thing. Compare that child to someone of their same age peers. Are they expected to reach the same milestones of their same age peers, those developmental milestones? If not, then you want to list those restrictions in the application. There are also things that you do not want to include in the application, and I want to stress this a lot. Do not include someone's ability to go to work or their performance in school. Do not include someone's ability to housekeep, manage a bank account, drive, or engage in recreational activities, which means playing sports, doing activities like running. If you do include these, it introduces confusion to the assessor, and they may think that someone is more, less restricted than they actually are, and they may not really understand. So sometimes that can lead to additional questionnaires. It can lead to denials. We recommend just sticking to those basic activities of daily living. So how do you submit your DTC application? You can do so in a number of ways: online, by mail, over the phone. There are many ways that the CRA is trying to make this accessible. So I'm going to go through 2 ways that you can apply. The first way is using that paper form, that form 22201. The first section of the form, again, that individual section, filling out part A using that form, and then filling out the part B of the form with a medical practitioner, and then sending in the completed form to the CRA or online through someone's CRA My Account. And if someone goes through their My Account, they can actually have this part of the site that asks them to submit documents. They click that, they choose the option that says disability tax credit, and they can submit those documents online. Otherwise, they can always mail in the form to their nearest tax center. And so different provinces have different nearest tax centers. In BC, and onwards, we usually submit it to the Winnipeg Tax Center, but there are other tax centers that are closer to other provinces. And again, but the CRA has made it a little bit more accessible, and medical practitioners now have the option of completing their section of their form online through their own medical practitioner portal. So this is why there's another way to apply for the DTC. So the way that this can go is that an applicant can fill out their Part A of the form online through their My Account or by calling the CRA and filling out their section of the form. And remember, this form, again, is their basic personal information and the information that they have for their caregiver. Once they complete Part A of the form, they will get a reference number. They can also then talk to their medical practitioner to fill out Part B of the form online. This can happen if whether or not they have completed Part A, so they can always go to the medical practitioner first, but the options are there. If someone, has filled out Part A and they've given their reference number, they can do so once they reach this stage of the appointment. But if they haven't applied for Part A, they can just ask their medical practitioner to start their application online. If the medical practitioner is starting their application online and the person hasn't filled out Part A, basically what happens is they'll fill out their portion. It's an online questionnaire. The questionnaire will generate a PDF that someone can print out, and then that printout can be sent into the CRA by mail or online once that person completes Part A of the form. But if someone has filled out Part A, they've gotten their reference number, they've given it to their medical practitioner, and then the medical practitioner is using that online portal, medical practitioners can also submit the form online on their patient's behalf. So that's that new way of applying. We recommend, no matter what, if the medical practitioner is submitting their form on their patient's behalf, that practitioners let the applicant see their application before it's submitted, so that applicants are really aware of what's being sent in before it's sent in. And then they have an idea of whether or not they can expect a denial, additional questionnaire, or approval. Let's take a look at how that looks online. So this is a Part A of the form now online in someone's My Account. Someone can access this if they're in their My Account and they click on benefits and credits, and there's a disability tax credit section, and they can start their application. Once they start the application, this is how it looks. Here are the questions. And once they're completed the application, then they have the application summary, and the reference number would appear in this second picture here. So let's think about some actual examples. I'm going to walk people through some examples in case you're helping your client apply for the DTC and you're typing up a sample document and you want to make sure that you have all the information needed. Well, let's go through a few categories. Let's say your client has restrictions in walking. The form will ask a few common questions. That is whether or not someone has medication, uses devices, or needs assistance from others. And this really is to give the CRA a sense of what they're doing right now to try to improve their conditions or improve restrictions. Then the form will ask if the applicant experiences some of these things. So pain, fatigue, impaired balance, impaired coordination, impaired or abnormal gait, limited range of motion, muscle weakness, and shortness of breath. Those are things that would be included in a walking application. When you're thinking about this, you want to think about how severe are symptoms? How often do these symptoms occur? So when you're helping your client, you're thinking about comparing them to someone their age without restrictions to determine what they're saying and how severe those symptoms are, and then how often that happens. Does it happen daily? Does it happen regularly, monthly? Does it happen most of the times during the week? Those are ways that you can determine how often they occur. Then you want to be specific and provide specific examples. So outside of describing those things that you're saying with pain, fatigue, impaired balance, then you want to include an example page where you're saying and providing even more information. So due to pain in lower extremities, the patient walks 3 times slower than a person their age without restrictions. They require frequent rests while walking. They struggle to walk up and down stairs and inclines. And when conditions are flared, they're unable to leave the house without assistance. These restrictions occur substantially all the time. Now let's turn to another category. So mental functioning. Well, this category is really unique because it includes subcategories. So it is attention, concentration, memory, judgment, perception of reality, problem solving, goal setting, regulation of behavior and emotions, verbal and nonverbal comprehension, and adaptive functioning. Remember that for this category and for all categories, persistent but episodic symptoms may still qualify. So even if your client is restricted and their symptoms are episodic, if it happens a lot and it's unpredictable, they would still qualify. So how does this mental function category work? The form will ask specific questions under each category, and I will talk about that. Let's think about goal setting. So those subcategories will include different questions. So making and carrying out simple day-to-day plans and self-directing to begin everyday tasks. And those are some questions that they're asking in the goal setting category. They will ask if someone has no limitations, some limitations, or very limited capacity when it comes to how severe these things are. So if someone says they are very limited capacity in carrying out simple day-to-day plans and very limited capacity in self-directing to begin everyday tasks, that means that have a very limited capacity in that whole subcategory. And if that is the case in any of the subcategories, they would qualify under mental functioning as a marked restriction. They'll also ask those same common questions that are in each category. So whether or not someone takes medication. And in this case, they're also asking how effective is the medication. They're also going to ask devices, therapies, and aids. And in this category, that means GPS safety devices, memory aids, counseling therapies, therapy. They'll also ask, can the applicant live independently? It might mean that someone needs assisted living or a long-term facility, or they might need hospitalization. But someone maybe cannot live independently if they need daily support and continuous support from a family member or from community-based health services. So those people you might also want to make clear that someone requires that in order to live. In that, you can provide examples and years of support. If a child is under 18, does someone have difficulty living independently if they require additional supervision at home or additional supervision at school? Then, after you answer those common questions, you want to provide specific examples in those categories that we mentioned. So if you're providing examples in that box that you're able to write additional information, you want to write sentences like, for concentration, has difficulty maintaining focus on a subject for any length of time, is easily distracted and leaves simple tasks unfinished. For verbal comprehension, difficulty processing verbal information due to cognitive difficulties. And for memory, it takes a lot longer to complete tasks and retrieve information. and requires visual and verbal reminders to manage their daily schedule. So I also want to go through this last category, life-sustaining therapy, because it's also really different. Um, Remember that this is the third way that you can qualify. If someone requires life-sustaining therapy to support a vital function, and it has to occur at least 2 times a week at an average of 14 hours a week. Some examples might include insulin therapy for diabetes and kidney dialysis, chest physiotherapy. Someone might need to have chemotherapy for a year. Those things would qualify. To keep in mind, if someone has type 1 diabetes, they will now automatically qualify from years 2021 onwards, and that's because the legislation has changed from that year onwards. But if someone had type 1 diabetes from before that time period and they want to get those retroactive years back, you still want to provide more information in order to get approved for any year before 2021. Some activities related to therapy are counted as time spent on therapy, but some are not. So it's really important to differentiate what is included in those 14 hours and what's not. So the time it takes for your therapy to happen does get included, but time to travel in order to get to the therapy appointment, it does not count. Or the time it takes to buy some prescribed treatment does not count. So being really wary about the different activities is really important in this category. So let's say someone needs to log their time, especially for something like insulin therapy, can be really difficult because you want to think about how much time it takes daily. So you're thinking about asking your client to create a log, a daily log of how much time they take, of the activities that are included. So it might include testing blood sugar, dosing insulin, treating high or low blood sugars, testing ketones, logging blood sugar readings, analyzing trends. So they'll take how much time they're doing for each activity, they'll calculate it, and then they will come up with their daily total. You can add that up to see how much the time they take in a week, and that's how much time it takes to complete all the therapy. Okay, so you submit the application, it's in. How much, what will happen next? Well, it will take a bit of time for the CRA to assess what happens with the application. The CRA does post their processing times. It's usually around 8 weeks, but there is a way to look up on the CRA to see how long it might take for an application to go through that whole process. And once they have been submitted, there are three possible outcomes. The first outcome is the CRA may have additional questions. So there may not have been enough specific examples in an application. In this case, they'll usually send an additional questionnaire straight to the medical practitioner. While the applicant will see that this additional questionnaire has been sent to the medical practitioner, they won't be able to see what the questionnaire says. So we usually recommend for clients who are in this scenario, if they haven't heard back from the CRA, it's been over 8 weeks, then they might, or over, let's say, a little over a month, they might check in with their medical practitioner to see if they received an additional questionnaire. If they get a copy of that questionnaire, they can help their medical practitioner answer the questions. The second thing that might happen is the applicant might be approved. Now, someone might be approved indefinitely, which means that they do not have to reapply unless the CRA asks them to. But they also may be approved for a number of years. The most common number that we see is 5. So let's say someone applies this year, they'll be approved for 2025 and it might go to 2030. The applicant will have to reapply when they reach that year. And usually we say it's important to get it approved by the time they file the taxes for that tax year that they need to file. But also it's important to maintain eligibility if you require the DTC for any of those additional benefits. So the third thing might happen is that someone might be denied. We like to say that the denial is not the end of the road. In fact, 90% of cases that come to DABC or Disability Alliance Canada, we see that it's denied usually because there's inconsistent information in the application or the application has been filled out without a lot of information. In these cases, the applicant has different options. The first one is to reapply. They can reapply at any time in the process. They can also add medical information. Usually we like to say that within a year of them receiving their denial letter, they can add additional medical information. This time, they're asking their medical practitioner to write them a letter that really details how they're restricted in that category. And that is the most effective way to talk about the restrictions. There's no need for too many medical documents to be included because you might have some contradictory information that might complicate the application. It's just important that the medical doctor or nurse practitioner or medical professional writes that letter. But let's say the application is really well done. There's no reason why this application should be denied. Well, someone can actually have a formal objection. They can write a letter to the Chief of Appeals, this time from the applicant perspective, saying, I disagree with this decision for these reasons. And I can look at the Income Tax Act and see that this should qualify for the DTC. They can also, if they're still denied, take their case to tax court. And that way they can always add medical information. They can talk about the full case, and it's in that really formalized setting. Now, it's kind of confusing which option to use when you are denied. I would really recommend someone speak to an advocate who can kind of play that detective role and isolate why someone is denied and determine the best move forward. In 2022, it was found that 27% of Canadians 15 years in age and older had one or more disabilities, relatively few received the DTC. This is just one snapshot, one stat that shows that a lot of other stats confirm, which is that there are a lot of people that are out there that are eligible for the DTC that do not have it. So it's really important to overcome these gaps. And I hope that all these service providers can join us and, can collaborate with us in making sure that there's more public education around the DTC, that there's more access to the navigational supports that will help them get them through, and that people can access free supports available because they should not be paying to get benefits that they're entitled to. That we help to educate health practitioners to close that primary care gap. And so those are all things that we are trying to do here. Next, I'll talk about the Canada Disability Benefit. So the Canada Disability Benefit, what is it? It is a monthly federal benefit that provides up to $200 per month for those who are working age. So that means you're aged 18 to 64 in Canada and who are approved for the disability tax credit. It's a really important benefit. In 2020, it was found that 10% of Canadians with disabilities aged 15 and older live in poverty compared to 7% of those without disabilities. In 2021, it was found that 62% of people living with disabilities were employed compared to 78% without disabilities. People with disabilities are more likely to be precariously employed and have higher income volatility. And, we know that economic status really does contribute to worse health outcomes and can really impact someone's individual health as well. So that's why something like this is adding a little bit more financial support for people who have low income. It was meant to be a benefit that lifts people out of the poverty line. It's far from that. It's only $200 a month, so it's really inadequate, but it is something that is a start. So, how do you qualify for it? To be eligible for the CDB, someone must be, again, between the ages of 18 and 64, be approved for the DTC. They have to meet Canadian residency requirements. Again, they do not have to be a citizen, they do not have to be a permanent resident. They just have to have residential ties to Canada. They have to pay taxes in Canada. Something that they also must have to do is to have filed an income tax return for their previous tax year. So if they want to qualify in 2025, they would have had to apply for and file taxes for 2024. And they have to meet low income requirements. So there are some income thresholds tied to this application. Benefit amounts are based on the income of the individual and their spouse and partner. So those with income under a certain amount can get the maximum benefit amount. And then the benefit is gradually phased out until they hit that upper limit of the income threshold. There's a working income exemption, so people can make additional income on top of the income threshold. They can work and make up to $10,000 for single individuals and up to $14,000 for couples without affecting benefit amounts. How does this work? So in order to receive that full $200 a month, they would have had to, as a single person, make $23,000 or under. As a couple, make $32,000 or under. Their reduction rate will reduce gradually 20% of a dollar every time you move closer to the upper limit. The upper limit for a single person is 35,000. The upper limit for a couple with where one person is applying is 44,000. And the upper limit for a couple where both are applying are 56,000. There is a working income exemption on top of that. So for someone who's single, it's 10,000. For someone who's a couple, it's 14,000. So it's if someone is making under 23,000, but they're also making an additional 10,000 on top of that, that's okay. So really, when you're thinking about someone working, they can make up to 33,000 and still be approved. So basically, it's an easy application, but you have to remember the three things that you'll need. You have to get the DTC. You have to file their taxes, make sure their most recent taxes have been filed with the CRA. And then they have to do a separate application. Applications from the CDB are not through the CRA, but through Service Canada. And you can do the application online. You can mail in an application. You can do it in person, over the phone. People can do it through teletypewriter, and there are accessible versions of the application as well. Legal representatives can also apply on behalf of an applicant, and where an applicant is determined that they don't have the capacity to apply, Service Canada will help with that as well. Okay. Lastly, I just wanted to run through the Registered Disability Savings Plan with everybody. So the RDSP, what was it? Well, it was created by the federal government as a long-term savings plan for people with disabilities and their families. To open an RDSP, you have to be approved for the disability tax credit, have a social insurance number. Again, doesn't have to be a Canadian citizen or resident. You just have to have those residential ties, and you have to meet those Canadian residency requirements. To get the RDSP, you have to open the RDSP by December 31st of the year you turn 49. So there's age criteria here. So they have to open it by the December 31st of the year they turn 59. But in order to qualify for grants and bonds, they must open their RDSP by December 31st of the year they turn 49. This is really important to think about because the RDSP, the best part about the RDSP is that it is kind of like a savings plan that someone can't access right away, but it's important to grow their savings and investments over time so that when they're later years, they have enough money to support themselves. The difference between an RDSP to other financial tools that are kind of similar, like the RRSP, is that the government puts a lot of extra money into this account. So $90,000, up to $90,000, if someone opens up their account, um, before they turn 49, they can access these matching grants and bonds. Why might someone open up the RDSP if they are over 49? Well, for most provinces and territories, the RDSP is also considered exempt as income, which means that if they are receiving provincial disability assistance, for most provinces and territories, this would allow them to kind of have their assets and income in a financial savings vehicle that does not mean that they'll have their disability income affected. Let's talk about those government contributions. RDSP bonds, the Canadian Disability Savings Bond. Well, someone can get the Canada Disability Savings Bond if it's just based on income. So if their family income is less or equal to $37,000, then they'll get that full bond amount. And that is a maximum of $1,000 a year until the age they turn 49 and up to $20,000 over a lifetime. Bonds can be claimed without personal contributions. So they can not make a lot of money. They don't have to put any money into their RDSP as long as it's open. They might get the $1,000 every year until the year they turn 49, which can then grow significantly in savings, and they have a nice savings pot for their future. If their family income is between 37,000 and 57,000, they can still receive partial bonds. So it is also that gradual bond that they can receive. And then let's talk about matching grants. So if they are able to contribute, they can actually access even more money, up to $70,000 over a lifetime before someone turns 49. How do they work? Well, it is about family income. So if someone's income is below that $114,000, then they can get every year up to $3,500. The way that it works is that your first $500, it's matched 1 to 3, which means you put in 500, the government will put in 1,500. The next $1,000 is matched 1 to 2. So you put in $1,000, and the government matches it with $2,000. So the magic number we say is that if you're able to contribute, put in $1,500 and the government would put in $3,500. If someone's income is above $114,000, they can still access they can still access grant amounts. It's matched 1 to 1. You put in $1,000, the government matches it with another $1,000. Someone can receive grants and bonds for up to 10 years before they open up their RDSP. To receive the retroactive grants and bonds, they must open the RDSP by December 31st of the year they turn 49. If anyone opens it up at age 50 or above, they will not be able to access retroactive grants and bonds. So getting someone to that RDSP stage by the time they turn 49 is really important. Bonds are received automatically. So we've seen someone open up their account and then receive $11,000 in their bank account right away, in their RDSP account, I should say. But if to get those grant amounts, there are strategic ways that someone can contribute to their RDSPs to access all the retroactive grants amounts, because the calculation is a little bit different. And so we recommend that someone talks to their financial advisor in order to determine what those great grant amounts are. You can check out how much someone can earn in RDSP using Access RDSP's online calculator, which is at www.rdsp.com/calculator. There are rules that are there if someone withdraws from the RDSP. We have to remember the RDSP is a long-term financial savings vehicle, so it's not something where you're meant to, um, put money in, get some money from the government, and then take it out right away. It's not going to be really effective for addressing sort of those daily urgent needs. But it is something where you do want to think about it as a long-term savings plan. So withdrawals can be made without penalty after the beneficiary is in the calendar year that they turn 60. Early withdrawals are possible, but there are rules, and it's the 10-year repayment rule. What this means is if someone takes out money before the age of 60, they'll have to pay back all or part of the grants that they received in the past 10 years from the government. Um, there are some cases where someone might be able to take out money due to financial hardship, but these cases are very few and far between. So it's really important to talk to your client about this and have them understand what the RDSP can be used for. So how can Disability Alliance Canada help? Well, we provide direct services through federal disability benefits, including the DTC, Canada Disability Benefit, RDSP, Canada Pension Plan Disability, all benefits and linked benefits and credits. We work one-on-one with individuals and prepare sample materials that can be used for applications. We help with all stages of the application. So with applications, with appeals, with denials, with reconsiderations, with additional questionnaires, any stage we can help with. We also do a lot of public education and resources. So there's a resource that we developed with OCASI called the Guide to the DTC and RDSP for Newcomers with Disabilities, which is available on our websites. We also provide capacity building for service providers. So if anybody is here as a service provider that wants to help support clients and you have a little bit of organizational capacity to do so, contact us and we can help to train you so you can provide that great service. And training can look like a specific workshop, can look like a Q&A session with our providers, or it can look like, actually getting trainings for those things. And then we have an online tool called My DTC app that you can access at mydtc.dabc.ca, providing in-depth guidance for medical practitioners and a tool to help people get started with the application. So it includes that in-depth guide, and then people can fill out our online questionnaire, and it generates a PDF they can take to their medical practitioner detailing all their restrictions. Okay, and that is the end of the presentation. And now I would love to answer some questions.
Thank you so much, Cynthia. So you can check the Q&A. We have a number of questions there. So as you respond to them, I will also be running the polls at the same time.
Okay, wonderful. And I just want to put the slide up here so you can see how to contact us. And for people in BC, that you can contact us at Disability Alliance BC. And for those outside of BC, can contact us at Disability Alliance Canada. Okay, so will there be additional resources to access after the webinar? I have an appointment during June. As a portion of it, of course, we will send out an email to Tekla. Then Tekla can send out an email, including this presentation and all the links that we have for some tools that we find are very helpful in this process. The second person asked, Lisa had asked, dyslexia is a common LD. Many folks have difficulty paying for a formal education diagnosis. How can medical practitioners play a role in diagnosing dyslexia without a formal education of formal diagnosis? Dyslexia is definitely a common learning disorder, and it is sort of difficult to assess without that psych ed. But I will say, psych ed assessments, usually I would recommend someone not use psych ed assessment when applying. Do not put that in because psych ed assessments do assess when someone is excelling in a certain subject, which might be the case because it is a complex learning disorder, um, versus places that they are, still struggling. So even if you get the psych ed, do not include that in the application. How medical practitioners can play a part is really just focusing on those basic restrictions when compared to same age peers. For example, let's say someone is trying to read basic instructions, right? So that might mean, a very basic instruction on a box of KD. Maybe dyslexia can be impacting that ability. Maybe dyslexia can impact ability to understand left and right directions. Does that person need GPS? Does that person get lost? Those things are good things to keep in mind. Other things to keep in mind is it is very common for dyslexia and other learning disorders to be comorbid with other conditions like anxiety. So thinking about how anxiety can impact social interactions, can impact all these other things that kind of come together and mean that that person is restricting those basic activities of daily living. So playing less of a focus on psych ed assessments and just focusing on the restrictions. Someone anonymous might say, what might cause the CRA to reject a DTC application and ask for an additional questionnaire to be sent to the healthcare provider? In this instance, it is an autism diagnosis of the child. So the most common reasons why the CRA rejects an application doesn't have to do with whether someone is ineligible. It has to do with how the form looks. So that usually comes because the form does not have enough information, or the form is confusing and makes it sound like the applicant is less restricted than they are. So usually if an assessor has more questions because a questionnaire has been left quite vague and an application has been left vague, um, they will send an additional questionnaire. Usually you want to stay consistent with a lot of the information on that questionnaire, but you want to add examples that really show restrictions. So that's really where you want to be specific and provide as much detail as possible. Dora asks, if information on caregivers are not included at the time of the application, can the DTC be transferred to a supporting family member later on? Great question, Dora. Absolutely. So once someone is approved for the application, at any point during their eligibility period, they can send a letter to the CRA asking to transfer.
Yeah, I read it. I read it. The one for the housing.
I'm so sorry, Shaba. I cannot hear your question. Okay, I'm going to continue answering Dora's, but yes, at any point during the eligibility period, someone can ask for their credit amounts to be transferred. They can ask for their previous year's credit amounts to be transferred. They can specify how long they want their credit amounts to be transferred. So let's say they just want it for a few years of their eligibility period. They can specify that and make all those changes and adjustments by writing a letter. And we can help with that as well. Bilkis asks, without the CRA reference number, anybody can apply for the DTC? Yes, you don't need the CRA reference number to apply. You can always apply using the paper form. You can always ask the medical practitioner to access that online tool without the reference number. What it just means is that without that reference number, the doctor and medical practitioner cannot submit the application on their patient's behalf. But that doesn't matter because the patient can always submit their own application on their own behalf by mailing it into the CRA, by submitting it online on their My account. For individuals who are eligible for the CPP disability and ODSP, do you think they should apply at the DTC at the same time? Yes. I want everyone to think about all of these three applications as separate applications. Let's say you have your provincial disability assistance like ODSP. Let's say you have CPP disability. Let's say you have DTC. They're all separate. They all have different functionings. And it's a really good idea to have them get all three because they are going to benefit the individual in different ways. I'll just provide a little bit more of an example. So for example, ODSP provides a monthly payment for people, and they might also include some healthcare benefits, right? So it's really important to get that. CPPD, that's for people who are determined to be ineligible to work indefinitely. That gives a little bit of a top up to someone if they are already receiving their disability assistance, but also it's its own criteria. So, beneficial for some individuals who, let's say, don't make any money, but they have a spouse or a partner who might be making money. And that is also a monthly payment that someone can access, but does not have any health benefits. And then the DTC, as you know, is a tax-related credit, can help with CPPD because CPPD actually is a taxable income support, which means that people have to pay taxes on it. And the DTC helps reduce the taxes that someone pays. So can reduce the taxes that someone on CPP pays. And that is how they all work together. And DTC as well, it unlocks a lot of other benefits. So really important to get all three. Anonymous says, in Canada, Hashimoto's thyroiditis and hypothyroidism generally does not qualify for the disability tax credit due to specific eligibility criteria established by Canada Revenue Agency. The CRA's framework tends to overlook chronic but invisible conditions such as autoimmune thyroid disorders, which may not appear disabling on paper, but can have a significant and lasting impact on an individual's daily functioning. Many individuals with these conditions experience ongoing fatigue, cognitive impairment, depression, and other symptoms that severely affect quality of life.
Hi, Cynthia. There is someone raising a hand.
Yes,
Senara.
sorry, Sinara.
Hi, sorry. So I have a client, service participant who is asking, what is the interest rate for the RDSP?
The interest rate for the RDSP.
Mm-hmm.
It does, you do have to depend, it all depends on, what investments you are making, and what level of investment that you are getting into. So let's say, you can think about the RDSP as any kind of investment. You can be a conservative investor, or you can be a more risky investor, and you can decide to have different returns come in. So for example, you might decide I'm going to have a balanced workbook and that might be a 5%, or you might decide to be more risky and you might have more knowledge on investments and then decide to, make the investment changes on your own. Different banks have different offerings, and different financial plans have different offerings. Yeah, I can definitely include in the resources a contact information for our partner organization, Plan Institute. They have helpline advisors that can help to answer more in-depth questions on an RDSP basis. But I would
Great.
recommend that people shop around. Yeah,
Okay, thank you so much.
of course. So back to this person's question about autoimmune diseases, thyroid diseases. So again, I want to emphasize that the CRA actually doesn't care about diagnosis. So actually someone with thyroiditis, hypothyroidism, other invisible disabilities would still qualify. It definitely just depends on the restrictions that they face in everyday life. So focusing less on what the patient has, what the client has, and focusing more on how that patient is restricted in their daily living is how you want to continue on with this. And I don't want anybody to think that any condition will not qualify. It's just based on how severe restrictions are. So I would try. So if someone does have ongoing fatigue, cognitive impairment, depression, other symptoms that affect quality of life, these are restrictions that would be very important to the DTC application. Okay. Olena asks, these individuals are required to take daily lifelong medication, typically levothyroxine, levothyroxine, I'm sorry if I'm pronouncing that very incorrectly, to replace the body's missing thyroid hormone. However, treatment does not address root autoimmune cause, nor does it eliminate symptoms in many cases. Instead, it functions as a hormone replacement to manage a critical body function, similar to principle to insulin therapy for individuals with type 1 diabetes. Yet under current CRA guidelines, hypothyroidism and Hashimoto's are not recognized in the same way as diabetes, despite the fact that both conditions involve lifelong dependence and medication, can lead to severe health complications, affect, physical and mental health well-being. This discrepancy highlights a gap in how chronic conditions are evaluated for disability support in Canada. Okay, so this is just a continuation of the last times, and I do want to say that the life-sustaining therapy category can be a little bit more complex, but that does not to say that thyroidism doesn't have its own effects in daily living. That include fatigue, that include, other difficulties, may include some mental functioning difficulties like brain fog, things like that. It is important to not only think of your condition as affecting just one category, but maybe your condition affecting a multitude of categories. And you can always sort of appeal any portion of the disability tax credit application. So good to try anything. And if you need advocate support, we're here to help. Okay. Samar says, the caregiver, do they need to share the same address with the person holding the DTC? The answer is no. Someone can be living in a different location and still get the DTC transferred. If the person is, he asks, the second question is, if the person is with the DTC is over 65, can they transfer to their spouse that is working? Absolutely. The DTC can be transferred to the spouse that is working. And often case, that's an easier process. You don't even have to write a letter. If you're filing taxes together, you can just make those changes on your taxes. And absolutely more beneficial for the spouse who is working to have the DTC on their taxes rather than keep it on the other spouse's taxes. 3, is depression considered eligible for the DTC? Again, we want to not think about diagnosis as being eligible for the DTC, but absolutely, depression can impact basic activities of daily living. And if they impact them enough, then they are going to be eligible for the DTC. So things like, is it difficult to go outside into the community? Is it difficult to perform basic activities like basic hygiene? Do they skip showers? Do they forget to eat? Those things are really important. Does depression impact their emotions and their regulation of their emotions? All those things are going to be talked about. Does it impact goal setting? So those are things where you're thinking about how someone is impacted. Someone anonymous says, is there a website or list of medical conditions that are recognized under the disability tax credit so we can quickly check? So yeah, I just wanted to reiterate that we don't want to think about medical conditions as being eligible or not eligible because the diagnosis does not matter. It is more about basic activities of daily living. So in a sense, you want to think about that all conditions could be eligible. It's more about how someone is restricted in their daily life. Can you please repeat what Part A2 means? When do you fill that in? Yes, of course. So the second part of Part A has to do when someone wants to transfer their credit to an eligible family member to provide financial support to help them with their food. So grocery support helps them with their clothing, so helps them pay for clothes or gives them money regularly to purchase clothing, or helps them with shelter, so helps them provide regular money that they end up paying their rent with, or helps them with utility bills. If they want to transfer their unused amount of the tax credit onto their eligible caregiver, they can do so by filling out Part 2. The nice thing and important thing is that it's not going to be the full tax credit amount. It's any unused parts. So at any point, the applicant will always have their taxes reassessed first, and then any unused tax credit amounts will be transferred onto their eligible caregiver. Aaron asks, when and under what circumstances can an RDSP holder start withdrawing money out? So if someone wants to draw money out without penalty, we usually ask them to wait until they're 60. But the real answer is a little bit more complicated. Withdrawal penalties just happen if somebody wants to withdraw money out of their account, and they have been receiving grants and bonds within a 10-year span. But let's say someone opened their account when they were a child. They open an account when they're a child. And their parents have maxed out on all the grants and bonds that they could within that period. So they have gotten all the bond amounts, they have gotten all the grant amounts, and there are no more years to contribute to get any more government contributions. So they've done that within a 20-year span. Now they just have to wait 10 years for their money to be vested, which means to be in that holding period. And once they're out of that 10-year period, they can now start making withdrawals. And they don't have any penalties because the only penalty that they would have had doesn't apply because they've had all the grant amounts done and dusted. Then they can actually start withdrawing their money out of their RDSP earlier at age 40. But because the rules are so complex, I would recommend just telling clients age 60. And if they have more questions, to refer them to DAC or refer them to our Partners of Plan Institute, because it's a little bit hard for people to grasp when that 10-year rule is, if they have actually accessed all the grants and bonds. And so it requires a little bit more conversation than people might think. But it is possible for people to take out money before 60. Anonymous asks, can I move my RRSP to RDSP to take out at age 60? Yes, the RDSP does include rollovers that people can make. They can make an RESP rollover, they can make an RRSP rollover, and those are all possible. Anonymous asks a question about Part A, number 2. Part A2 is on the first page of the DTC application, and then telling us about the person intending to claim the disability amount, if different from above. When would the disabled person not be applying for themselves? So the person who's an applicant would always be applying for themselves, but maybe they don't pay a lot in income tax and they would like the unused amounts of their credit amounts or their DTCs to be transferred to that eligible caregiver. So it could be for any child who's under 18, the credit amount would go to their guardian. It could be for an adult who doesn't work, but they have still rely on their parent or family member who provides them with food, shelter, and clothing costs, and they want to help their family member also reduce the taxes that they owe. Regarding the Canada Disability Benefit, what is the income requirement for an individual with kids with disabilities, single mom, 2 kids with 1 mental disability? I think this is the Canada Disability Benefit, but I'm not actually sure. So please do let me know if I'm wrong about this. But for that, you're looking at family income. If there's only 1 single mom, you're looking at that single mom's income. And so the income requirement would be $23,000 and up to an additional $10,000 that can make with that working income exemption, which is $33,000. Nazreen asks, what can a person with celiac disease apply for the disability tax credit? Yes. So again, doesn't have to do with diagnosis, just has to do with how someone's restricted. Anonymous asks, are people with living HIV and ODSP and on ODSP eligible? Yes. So that's that same answer. Anonymous asks, in some provinces, there's a long wait list to meet with doctors and nurse. What do you do? This is such a good question, and it is the hardest question to answer. At Disability Alliance Canada, we don't like to refer people straight to medical doctors because we know that it can be really difficult to assess how effective a doctor is, if they are really understanding, and it can be really hard on the medical doctor in case it does clog their systems. But we're always working on creating better relationships with practitioners to make sure that people have a little bit more options. There are telehealth companies that maybe charge for help with medical forms such as this. And there are, organizations that provide a little bit more support, but we usually like to keep that as a last resort. Our main advice is for people to try a walk-in clinic. We've had many cases where someone sees the same walk-in clinic multiple times, and then a doctor is willing to help them. And so, that is a really good way to do that. Another thing to think about is, thinking about other medical practitioners that might be able to help. So if you can't find a doctor, do you have a medical practitioner like a psychologist? Do you have a physiotherapist that can help with these applications on that?